It's Tuesday, March 3rd, 2020. Another dramatic day on Wall Street. Dow Jones down nearly 800 points. Emergency rate cut today, 50 basis points. 10-year bond yields record low. They fell below 1%. What's interesting, there were a lot of interesting things that took place today, and I jotted down some notes. I'm going to share some things, not in any specific order, but I'm going to recap some things that happened today, and I'm going to talk about what possibly can be happening in the near future, why all of us must be preparing. The president came out and said that he wanted more rate cuts, wants negative rates, and told the Fed that they need to stop following and start leading. You know, there are people out there that laughed at you, they laughed at me, that negative rates would never come to America. Let me tell you today, we have 1 point left and we are at zero. Where do you think we're going after that? Now listen, nothing even bad has even happened yet. We have speculation, of course, with this infection, and it doesn't look good. There's no doubt about it. But we're not in the situation that China is in or Italy yet. And hopefully we don't get to that point. But right now, things are still pretty good. We have 1 point left. We're at zero. And there is no doubt the bad times are coming to America. When they get here, what is this Fed going to do? It is literally, as of today, out of ammo, in my opinion. Another question that I have for everybody out there who weeks ago, they were telling you and I that this economy is doing great, that everything's wonderful, the consumer's strong. These people who actually believed that garbage, I don't know where they're at today, but to those people out there, how come if everything is so good, how come the Fed didn't raise rates today? How come the Fed had an emergency rate cut today of 50 basis points, a half point cut today? Is that because this economy is booming? Is that because the American consumer is doing so well? Let's stop blaming everything on this infection. This is just a catalyst, okay? The infection isn't the cause of all this. The massive debt, the poor and weakening economy is the real cause of all of this, not this infection, okay? If we had a sound, healthy economy, if we were manufacturing things here in America, we would not be seeing the devastation in these markets that we're seeing right now. You know, yesterday, the president bragged about the 1,300 points on the Dow Jones. Today, that Dow Jones lost 800 points. I do not understand why he keeps taking credit for this market. I mean, he has to understand that this whole thing is artificial and propped up, just like he did 3 years ago when he ran. I don't get the mindset of going negative. You are going to be paying the banks when you lend them your money. So that's where we're heading, and it's not funny anymore, is it? So to the people out there that thought this could never happen, that we wouldn't go to zero, that we wouldn't go negative, we're getting very, very close to that. And in my opinion right now, I mean, 1 point, we're at zero. Think about it. We have some more concerns coming. The farmers in very big trouble. We will be bailing the farmers out. Now, with this infection running rampant across the globe, get ready. We will be bailing out companies, corporations, healthcare, banks, you name it. Unfortunately, you are not going to get a bailout. And unfortunately, with all this economic devastation coming, we are going to start seeing layoffs, and we may be seeing massive layoffs coming to America. You, the consumer, you, the citizen, you are not going to get a bailout. Corporate America, healthcare, insurance companies, corporate America, the farmers, they'll get the bailout, you won't. So I hope if you're watching this video that you are making extreme preparations, because I believe that we're in the very, very early stages of the biggest economic collapse the world has seen. And things may not just collapse overnight. They may just be collapsing in stages. Could it collapse overnight? Absolutely, 100%. A big bank goes down, it's taking everything down with it. But we may see it break down into stages. Now, as I said, layoffs are coming. And when layoffs come and people aren't working, you're going to see a decrease in demand. Now, if this infection really grabs hold here, that is going to also accelerate a decrease in demand here in the US. And so when we start seeing extreme demand decreases, we're going to see huge economic trouble. This is going to propel this collapse even into a faster state when demand starts slowing down, and it is going to. So when people are losing their jobs, when people are afraid to go into big crowds, they're afraid to go to the malls, they're afraid to go to a ball game, they're afraid to go to a music event, to a resort, to get on a plane. When demand suffers, we are going to see this economy absolutely spiral out of control like it was on steroids. So expect that to be coming. CNBC today. Just to recap on some things, Fed cuts rates by 0.5 percentage point to combat this infection. I think that when Jerome Powell came out and did this sent the wrong message. To me, it seems as though the Fed is very concerned about something that they're not sharing with you or I. What was interesting is stocks began to rally a little bit, and then the whole bottom fell out. Very crazy day today. Now, again, the Fed has 1 point left. What happens when we hit the real bad times here in America as the Fed's balance sheet is exploding, as they have 1 point left to drop and we're at 0? So maybe 2 more cuts and we're there. We're at 0. New York Fed today, check this out. Nobody's talking about this. The Fed had to inject $120 billion this morning into the repo market. We have a liquidity shortage in the US banking system right now, and nobody is talking about it. The Fed will have to boost the size of its repos or expand QE4 in order to keep this whole thing propped up. How long can this go on? We are seeing massive cracks in the system now. Think about this, okay? $120 billion this morning. Where do you think these markets would be right now if it didn't get a $120 billion injection? Okay, they are manipulating this as much as they can, and they are losing control. It could have been much, much worse today. So we saw history take place yesterday as the Dow almost reached 1,300 points. Today, the 10-year bond yield fell below 1%. I saw it as low as 0.92. I think it's right about 1% right now. Again, this is a massive warning sign that there is big trouble out there. There is fear, and now we're seeing panic. What does tomorrow bring? I don't know. Who would have thought we would have saw what we saw today? This thing, there's so much volatility. We don't know what's going to transpire in the news this evening. We know that we've got a couple new deaths in the U.S. From this infection. We don't know what's going to happen anywhere on the globe where new infections will pop up, more deaths. I mean, this is not helping the market at all. But again, if we were manufacturing here, if we had a sound economic system, we would not be in this kind of situation that we're in right now. The infection, again, isn't the real problem. The real problem is this Fed. You know, they kept rates too low for too long, and now we're resorting right back to what got us into this mess. We're going back to 0. quite possibly, more than likely, negative, and the Fed is going to print massive amounts of money, making the bubbles even bigger, resulting in an even bigger crisis. If this economy was fundamentally healthy, no infection would be able to make it this sick. I mean, this economy is now being exposed for what it is. It's fake. It's obvious that we have not learned that artificially stimulating the economy just creates massive bubbles. Maybe the Fed is creating bubbles on purpose, or maybe it just doesn't understand. The infection that we're seeing take place around the world now may be the pin that pops the bubbles. We made a very, very vulnerable economy out of massive money printing, low rates, corporate buybacks, fake data, fake optimism, you name it. The whole thing is fake. And now this economy is extremely vulnerable. And you know, at some point, it's going to pay the piper. And while we're now fighting infections and economic bubbles and a faltering stock market, a sickening GDP, workers' wages not going up, stagnant wages, everything just literally crashing at the same time, and the bubbles continue to get bigger. Here's what one thing we know. I was reading an article today. 84% of millennials cannot change a light bulb. 1 in 8 don't know how to clean a car. 33% need a smartphone to find their way around. And I bring this up because when the bad times get to America, and they're knocking at the door right now, when reality comes to America, when it arrives, people are not going to be able to deal with it. Just think, if the prescription drugs don't get here, half this country is dependent on prescription drugs. Half this country is obese. So many people physically unhealthy here in America, and so many people not even able to change a light bulb or clean their car. If you're dependent on this government to save you, you're in very, very big trouble. If you're dependent on the financial institutions or the banks to save you, you're in extremely big trouble. This is why you must be as self-sufficient as possible. You need to detach from the system. You need to be your own central bank, and you need to be getting prepared immediately. JP Morgan clearly believes that it is a matter of time before things get worse. They're keeping 12,000 workers at home. They will be working from home. They have 120,000 employees total, but 12,000 they're going to be keeping at home in case of emergency. CNBC today. World Health officials make urgent plea for medical gear. 89 million medical masks, 76 million medical gloves, and 1.6 million goggles will be required. So when I read this on CNBC, you know, is that telling you and I something, that maybe this thing is not going to go away tomorrow, that it may be worse than they're telling us? Very, very scary times. As you know, I do not give financial advice. When I make these videos, it's me sharing with all of you what I'm thinking, what I'm doing, how I'm preparing, but I do not give financial advice. But by sharing with you what I'm doing, it's very interesting when I read the comments to see what you're doing, how you're preparing, what your interpretation of things are, what your predictions are, how you see things happening in this country, socially, economically, politically, spiritually. It's very, very interesting to read those comments, and I learn a lot from it, and I know that a lot of other people are reading those comments and they're learning a lot too. So I really appreciate everybody making a comment, because that really is where the knowledge is. I'm just a person here concerned about my country and where things are going, and I'm just talking out loud with all of you. And what I found interesting today, as I come to you, and I'm thinking out loud here, watching the markets, literally everything in the red except two things: gold and silver. Gold and silver finished up today. Gold just had an incredibly great day. Silver had a nice rebound, but when I look at silver at $17.15, I'm not sure exactly where it is right now. I mean, what a no-brainer to actually be able to buy an asset for a little over $17. Makes me think that maybe I need to make another purchase of silver. I just ordered gold last week from SD Bullion, and I'll probably order silver this week from SD Bullion. And I say SD Bullion because a lot of people write me, and they've been writing me, especially with everything that's been going on, who I recommend for a metals purchase. I recommend SD Bullion. I have a link down below. That doesn't mean that I own the company or I work for the company or that you should go to SD Bullion. That's up to you. You can go to your local pawn shop, you can go to your coin dealer, you can go to your coin shop. It doesn't matter. I just think that it's important that we are all taking advantage of the sales. And silver, barely over $17, to me is a no-brainer. So that will be my next purchase. My next metal purchase will be silver. As I said, I just ordered gold. So looking at these prices now with silver, and I think the ratio is what, 95 to 1. So silver to me looks like a no-brainer. And if you don't hold it, you don't own it. We are talking about buying the physical metal and putting it where you can get to, not in a bank, not in a safety deposit box, a place where you can get to. So I think that that's where I'll be putting a couple dollars this week. Where will you be putting money? Comment down below. I'd like to know your thoughts. Where are you putting money right now? You just piling up some cash, saving some cash? You buying silver? You buying gold? You buying some land? What are you doing? We would all like to know. Please comment down below and let us know like where you think the smart money. How about Bitcoin, cryptos? What are you doing? We want to know. I want to close with this. I watched David Stockman in an interview, and I jotted down some notes. I'm going to kind of paraphrase through this, and he made some really good points. And this is why I think it's so important to be holding hard, tangible assets like gold and silver. Why it's important to have an emergency fund of cash put away. It's why it's so important to be preparing. And we're talking also food, water, and security. If you don't have security, water, and food, you shouldn't be buying metals today. Number one, make sure you have security. Number two, make sure you have water. Number three, make sure you have food. But David said this, we have had a fake recovery for 10 years. That is no doubt a fact. The Fed has been crazy with easy money blowing out its balance sheet. I haven't looked, but it's probably around $4.5 trillion. This is a debt-fueled system that cannot absorb any interruption of cash flow. No doubt about it. We now have a shock to the system, and it's going to expose this fake market. And the shock is this pinprick of this infection that is taking place. It is exposing the fakery in these markets. We're finding out that these markets are built on quicksand. There's no foundation. They are a joke. Components, parts, raw materials. This shock to the supply chain is going to disrupt the entire economy. We're beginning to see that. We don't make anything here. As the infection gets worse, workers don't go to work. Consumers don't go to malls. Diners don't go to restaurants. Travelers don't get on airplanes. People don't go to conventions or they don't take vacations. Hotels get impacted. Economy will be brought to its knees. Think about it. As I said, layoffs could be coming. And in fact, they are coming. Cash flow interruption comes with layoffs. 75% of households in the US have no savings. So people can't change a light bulb. They don't know how to clean their car. 75% of this country doesn't have a savings. How can the president come out and say that we are prepared? We are ill prepared. We are absolutely not prepared for an emergency here in America. We're going to be exposed. We are going to be exposed. We are not prepared. And many people, millions of people, are going to pay a severe price for not being prepared. Don't rely on the government. Don't rely on the banks. Don't rely on your police department. When this thing crashes, you are on your own. Companies are living hand to mouth. Corporate debt is at all-time highs. And you know what? People are living hand to mouth too, paycheck to paycheck. Household debt at all-time highs. As cases soar, panic will set in. store shelves go empty. Are you prepared? Do you have food and water? Do you have emergency supplies? This economy cannot afford interruptions, just like the average household. Both this economy and the average household have no emergency fund. Ladies and gentlemen, prepare, prepare, prepare. You are on your own. God bless every one of you. Talk very soon.